minutes, and then we'll open the floor for the question answers. I hope that works, sir.
That works very well, Dr. Gupta. So thank you once again. And I wanted to thank the IICA for giving me this opportunity to interact with you all. As Dr. Gupta mentioned, I've been on all sides of the aisle. So I've been an independent director myself on several companies. And now I happen to be on the regulatory side, where as a quasi-judicial authority, I also look at cases which involve show cause notices to some directors. Some of them happen to be independent directors. So I've seen from all sides of the spectrum. First of all, I wanted to thank all of you on this call, those of you who happen to have the misfortune of being independent directors for doing this. Frankly, you are our eyes and ears as far as SEBI is concerned. And we're all on the same page in terms of ensuring there is corporate governance, in terms of ensuring that best practices are being followed in the company. And if the board of companies do their job, frankly, 90% of SEBI's work is already done. And the reason for us to exist can actually be questioned at that point in time. What I thought I'll do is I'll take less than 30 minutes. In fact, it'll be probably better if we have an interactive session because we have a lot of knowledgeable people here. And I'm sure you have insights, you have questions, you have thoughts, which we can have an open discussion on. What I thought I can do is maybe tell you a bit about what we from a SEBI perspective look for from independent directors. And I know it can come across as a thankless job, but we try and make it as less thankless as possible. Some of my own experiences of having been an independent director, some of my reflections. And then finally, a bit about my perspective when I, as a quasi-judicial authority, see cases of, let's say, charge sheets against directors, particularly independent directors. In fact, let me take that part the first. One thing I've realized when I joined this side of the fence on SEBI's side is that particularly when it comes to independent directors, we are extremely thoughtful in any action that we take. You will rarely see us taking very strong action or even light action against independent directors. I'm not giving a free pass here, but we realize that independent directors are frankly not operating the company. They're probably meeting once in a quarter. They're relying a lot on representations made to them by the company, by auditors, by independent agencies, and so on and so forth. You're doing your work on a best effort basis. So for us to actually contemplate any kind of action against independent directors, there has to be a very, very strong case. There has to be a case of, clear negligence, clear omission, an auditor actually giving a finding which is possibly not discussed in detail or tackled in the right manner. So the threshold for us to contemplate any kind of action against an independent director is pretty high. Again, there could be exceptions here and there, and I'm happy to take exceptions offline. But and I find across all my fellow quasi-judicial authorities, it's pretty much the same kind of approach. We are very, very mindful that there are limitations of how much an independent director can do, and therefore we try and keep the thresholds really high. Let's have that out of the way. Let me go now into what do we look for in independent directors. Particularly in promoter-driven companies, and particularly where you have even if it's a professional company, but if you have a very strong management and a very strong MD CEO or a very strong chairperson, the job is not easy, and we get that, right? But what we like to see in a board overall, and specifically with independent directors, is some honest discussions at the board. And it always puzzles us when we see very, 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 very difficult issues being hardly discussed and being closed in a matter of minutes. Now, I can try and take some examples, but I will avoid it. Some of them are also live cases. But the reality is, if 10 of us come together in a room, if for us to agree on where we need to have lunch, also will take a half an hour of discussion. But if you're making a very large investment in a large company, or if there is a related party transaction happening, and it's spanning several thousands of crores, and that resolution gets passed in 2 minutes flat, and it's recorded in the minutes as just we discussed and we passed it, it's not something that we necessarily like. We would like to see a lot more of open discussions about this. Now, particularly after COVID, now we also have recordings available of board meetings and committee meetings. But even in the minutes, we really would like to see some amount of discussions happening, particularly on issues which look a little weighty. Now, having been on boards myself as an independent director, I'm also aware that it's important to keep a healthy atmosphere. If we have a very belligerent board where we have huge discussions on every single item, it becomes painful for everybody. It becomes painful for the board. It becomes painful for the management. It becomes painful for the company. Actually, when I was appointed by the RBI, as Dr. Gupta mentioned, on the board of Yes Bank, we invited Mr. Damodaran, the former chairperson of SEBI, to give us a talk because he works on governance nowadays. And one of the things which he said, which stuck to my mind, was as directors, we have to learn the art of disagreeing without being disagreeable. And that kind of, I think, is very, very powerful advice. If every single item in the agenda is just perfunctorily discussed and passed, it doesn't sound right. I'm sure there are questions on many items, and these questions can be asked in a nice manner without necessarily having to upset anybody. And that fine line between disagreeing without being disagreeable, I think, is a powerful one. So what we do like to see to start with is a fair amount of engagement at a board level, particularly on weighty matters. The second thing that we like to see is, look, the management will always give its perspective. Typical managements tend to give a sanitized version of what's happening in the company, how well they're doing, how they're doing vis-a-vis competition, how the share price is doing, etc., etc. And typically, when you're discussing results, etc., they tend to be, all positive. That's human nature, and it's also partly true. Nothing that they would say would typically be wrong, but it's one side of the story. The good boards that we have seen also engage with independent parties to try and get a other side of the story. Good boards, good independent directors, we've seen them engaging with research analysts, for instance. All of you are on a listed company, so research analysts covering the company, sometimes even CIOs of mutual funds or other investors who are putting public money into your company stocks, and more in a listening mode. Of course, you can't talk because you probably have a lot of inside information that you can't talk about, but purely in a listening mode, where you get the feedback from them on what they see about the company, and particularly the aspects which make them think. So if there are concerns about some aspects of the business, if there are concerns about some aspects of the financials, if there are concerns about some things about what's happening in the marketplace around this name, getting that independent view from people who are more independent than the management is, I think, is always very, very powerful. And at least successful boards that we've seen have managed to do that, try and get intelligence from others and try and get the concerns being expressed by professionals so that the management can be given a chance to explain what their own take is. Even if you don't necessarily engage directly with these research analysts, at least having access to the research reports coming out, particularly from the brokerage houses that you trust or the big ones which have some name, and particularly focusing on the areas of concern or areas which are pointed out as being question marks in the heads of the analysts, and therefore asking the management questions. Sorry, I think the connection is a little difficult, but showing that you are actually keeping your eyes and ears open, particularly through these independent research reports, etc., is something that we like to see. The next thing that we like to see is typically things like grievances and whistleblower complaints. While these can be painful, a lot of them, we know that there will always be disgruntled elements in the company who will raise all sorts of complaints, and typically they'll be anonymous. But we've also found that, in fact, many of the investigations that we do and some of the investigations and orders that you see in the public domain that SEBI has come out with, including some recent ones, are often, instigated through these whistleblower complaints or through these complaints. So grievances and whistleblower complaints, the way in which they are handled, I think is extremely important. Both the audit committee as well as the board as a whole, we really like it when we see enough and more attention being paid to these, particularly the ones that look serious. The next thing that we like to see is some discussion on the quality of the external assurance that you're getting. So making sure you have good auditors, making sure that you have good internal, external, statutory auditors, independent lines of people overseeing the businesses. Because in many cases, look, as we say that your hands are tied to some extent, you're not day-to-day operating the company. You're relying on the assurance given by a whole bunch of people who are part of the ecosystem, including auditors who could be internal as well as external. But making sure that you have the right people coming out to you is extremely important. Now, we have often found that even the so-called big names sometimes make mistakes, but at least the directors cannot be faulted if there is an issue at the auditor's end. And if it is a so-called good auditor who is making a mistake, then there's a strong case to say that in good faith you accepted what the auditor said, and you can't be expected to double check what the auditor has come out with. So that process of making sure you have good names as auditors, as risk officials, as risk independent checks, concurrent auditors, that ecosystem of giving you assurance is extremely important. And then when they come up with some kind of qualifications or some points of emphasis, making sure that there is ample discussion around this, very, very important. What sometimes troubles us a lot is when we see an auditor report which is clearly laying out certain risks. It might be buried somewhere in the report, but it's clearly laying out a certain risk, and it's calling it as a point of emphasis, or it's calling it as a qualification. And yet the audit committee or the board, if it very perfunctorily looks at it and says discussed and moved on and accepts the management point of view, that to us starts to ring alarm bells. But the reason why you have these auditors is to give you a bird's eye view, an independent view of what really is happening. And when they are saying something, and in some of the cases that I've seen personally, in fact, there are some cases which I'm handling currently as I speak, we had very good independent directors on the board, people who are former bankers, people who are who are chartered accountants, who understand how these things work. And yet there is no discussion around a qualification, a serious qualification about, let's say, the aging of the accounts receivables, to the point that it's actually come as a qualification. And there's no discussion, and people choose to move on. That sort of raises a lot of questions about what really is the board doing about this. So besides the quality of the auditors and the assurance function that you've chosen, making sure that everything that they bring out is adequately addressed to your satisfaction, and ensuring that you document as to, so these are the questions asked, this is the replies given, this is how we either we got comfort or we didn't get comfort, and therefore we instituted the following checks and balances. I think that's extremely crucial. Particular areas where we want a lot of attention especially from the independent directors, things like related party transactions. Now, again, you have to go with what the auditor tells you, but this is an area where we have seen a lot of issues coming up. And, even things like royalty, for instance, we've seen plenty of cases where it appears that the royalty payments are kind of growing at a time when the company's own bottom line is not really growing. It appears that there is a possibility that the company is favoring certain shareholders over the public shareholders. Without necessarily saying that every case of every case of royalty is not a problem, but I'm saying making sure you're kicking the tires and checking as to whether there is something which seems to favor the promoters as opposed to the public shareholders, extremely important. Okay, so this is another area that is I would strongly advise that you spend some time on making sure that things like RPT, related party transactions, is well taken care of. Similarly, things like, again, a tricky subject, and I know it can be difficult having been an independent director myself, things like compensation for KMPs and for the MD and CEO. Again, an area where we would like to see both the NRC and the board spend some time in ensuring that there is ample justification, and there is a sense that, hand on heart, you have the comfort that this is correct. And it's not something that you're just taking at face value and moving on. Now, what we don't like, I'm not saying that we will take action against it, but what we don't like is when a bunch of independent directors move out together, all quoting personal reasons. In fact, the feedback I heard from some of the SEBI officials is that they seem to be like fair weather friends. They're all there, when things are going fine. The moment of the first sign of trouble, then everybody kind of moves out together. Now, I can understand what the thought process is, having been an independent director myself. But here is my strong suggestion. If there is something which is making you uncomfortable, please record it. I know it's not easy. I know, you've developed a relationship with the promoter, with the company, and so on and so forth. But our job is also a governance job. And if there is something which is making you uncomfortable, it's only fair that you express it in a form that allows for disclosure. SEBI is a disclosure-based regime. We try not to make judgments every time. We simply want to make sure that people are aware of what the issues are, and then, willing market, willing buyers, willing sellers, they will decide where the market should actually settle. So the best way of getting disclosures is, when you see something, say something. When you feel something, say something. And having these situations where people resign for personal reasons only from one company, not from a bunch of other companies, these don't make for very good governance or disclosure mechanisms. Dr. Gupta asked, what is it that we've been doing over the years? Some of you will argue we've been doing a lot, that maybe we should take it a little easy. But you're aware of the stuff that we've been doing over the last few years, which is, we've first of all, there was this big, after the Kotak Committee on Governance, there was a big upheaval or we tried to make a lot of changes in the way in which the directors are appointed, shareholder approval for the same, insisting on diversity, minimum of one woman shareholder or other director on the board, making sure that you have, or most companies do have, a meeting of only the PIDs put together, the governance structures around audit committee and so on and so forth, making sure that there's an independent director as the head of the audit committee. So a whole bunch of things that we have done. The whole point is, of course, to try and ensure that the governance aspect of this entire ecosystem is strengthened, that independent directors can do their job freely and fairly, and are given the tools to do their job freely and fairly. It's a tough job, we understand that, but we want to try and make it as realistic as possible. And lots of things, including composition of NRC, the responsibility of the NRC, appointment of and removal of independent directors. All of these things we've changed over the years. And again, I would love to hear some feedback if you have any about what you would like to the SEBI to do further. So I'm going to kind of summarize here and then stop and maybe take questions so that we can make it more interactive, like I said earlier. So the first is we are aware as SEBI that as independent directors, you are not line management. You are relying on assurances coming in from multiple people, including the management, including auditors, and so on and so forth. We will not expect you to be a combination of Superman and Spider-Man to delve into the company and figure out what's going wrong. At the same time, we do expect a certain level of due diligence coming in from the independent directors. First of all, we like to see good discussions happening at committees and at boards. We really get a lot of questions in our mind when we see perfunctory board meetings where things are just minuted as approved and we move on. By the way, one thing I wanted to mention to you is one of the things which really made me worry a lot. We saw a lot of good people coming from very, very good background, including from the armed services, including from former, bureaucrats, etc., who join a board in good faith. They are not aware of what's happening in the company necessarily. They are put on the audit committee. And then we find things going not necessarily correct as far as the accounting functions are concerned. And these poor people then get caught in the whole, mess. So the necessity for adequate training when you become an independent director, I think cannot be emphasized enough. You absolutely need to be trained. And the second thing that you need to ensure is that you have your range of expertise, right? You could be a legal expert, you could be an accounting expert, you could be an administration expert, you could be a business expert, you could be a chemical engineer who understands the business in that particular company. And you might be chosen for that particular quality. Armed forces people are normally used for leadership and for things like that, HR, etc. You've got to make sure that the board has adequate representations of all the skills required to do a fair evaluation. You've got to make sure there is somebody who can sign off on the accounts. You've got to make sure somebody who understands the legal parts, somebody who understands the compliance and risk part, somebody who understands the business and the domain itself, somebody who understands people in HR and leadership. So all these skills should be there in the board. If you see a board which is very similar and very generic, not necessarily with adequate domain or accounting specialty, etc., that should itself raise a lot of alarm bells for you. So anyway, so the point that we'd like to see is a lot of healthy discussions, a lot of thought into appointing the right kind of entities for assurance, whether it is auditors, whether it is internal auditors, concurrent auditors, whether it is even getting people to come and do an independent check of any part of the business that you want checked, where you have some questions. We want good quality people to be appointed there. When these people raise issues, those issues have to be discussed, and you have to hand on heart convince yourself and confirm to yourself that you're comfortable with the responses that have come, or if you're not comfortable, record it. Okay, so what is very difficult for us to countenance is if there is a qualification of some kind or a very clear red flag being raised by an assurance function, and that's not acted upon, then it becomes very difficult to explain as to why this was the case. We like boards that look at external feedback, including from research reports, independent research reports, including from investor forum, including from analysts and so on and so forth. We like boards that spend a lot of time on grievances and whistleblower. I know there's a lot of rubbish which can come in through that process, but you have to sift through and figure out. It's a nice form of kicking the tires and seeing what's really going wrong there. And we like, particularly in areas such as related party transactions, on things like remuneration, we like to see some kind of discussion happening to make sure that the board as a whole is kicking the tires. Finally, I'll reiterate the threshold for us in SEBI to take action against independent directors is very, very high because we know that you're not frontline managers. At the same time, the things that I mentioned, if there are large red flags and red signals being flashed by auditors or by independent assurance functions, and yet nothing is done by the board, then it makes our job a lot more tough to say that we'll do nothing. Final point, I know IICA is doing a good job, but it'll be really good if we can get a body of independent directors that we can deal with on a regular basis. What we do is we do a lot of consultation with industry. So we do a lot of consultation with industry bodies such as FICCI and CII, etc. We try and get other stakeholders, so we talk to the accountants, we talk to the lawyers, we talk to fund managers. These are all people who have representation in the form of associations, etc. We don't have a proper association of independent directors. It'll be great if we can create a forum because trying to have a conversation with 50,000 people is next to impossible. Everybody has a point of view. Everybody has very strident views. It's impossible for us to assimilate all of it. But if you can do something which is, get together, form an association where you collate what are generic issues and then present them to us, we would be really grateful for that. And in fact, we would probably want you to join some of our committees because this is exactly what we want to hear. As I started off by saying, independent directors are an extension of our governance function of our SEBI. You are our eyes and ears. So if you can get a body which is put together of independent directors, we would really like to have that body at the seat of having a seat at the table when we have our discussions on policy and so on and so forth. So I'm going to stop here and then Dr. Gupta, I'm happy to take questions. My only request to you is try and keep them short and incisive. I'm not going to promise you answers for all of them, but I can at least take them down. If I have some quick responses on some of those questions, I'm happy to give them right away.
Thank you so much, sir. Anantha, am I audible?
Yeah,
Yes.
you are audible. Go ahead.
Yes.
Okay. So it's very interesting talk, sir, from you, and a very, very interesting suggestion of having a consultation group or association, what you termed it as. Of course, I very well understand it's difficult because we have 35,000 people, but we have a select group of because we also do regular consultations for our learning and understanding. So we have a smaller, fairly smaller group of experienced independent directors with whom we interact, who represent different segments like public sector, private sector, listed, even unlisted public companies, having diverse set of experience working with different committees. I'll be very happy to orient you with that, and we can take it forward. Now, as sir has mentioned, we not spend more than 10 minutes, 10 to 12 minutes for the question. I understand time is very important. Anantha, can you quickly take up the questions? We can take 3 questions max, and I think that will be fine.
Right, sir.
Over to you, Anandita.
Right. Thank you. So I do have Unmesh, Mr. Unmesh. If there's a question, you can probably unmute yourself and ask that question.
Yeah, thank you very much. Good evening to you, Mr. Narayan. I have watched you at the Gatekeepers of Governance, and it was a pleasure to listen to the talks there. And it gives me great pleasure to see you talking here as well. There was one question that I have encountered recently. I had received an unsolicited call from a company regarding the appointment as an independent director. And the question they asked is, what value could I bring on board so that they could discuss this further?
So you want me to react on that?
Yes, sir. Some guidance.
Right. I really don't know how you want me to react on this one. Look, different companies have different ways of appointing their independent directors. I'll be very honest. My first job as an independent director was with CCIL. And this was a direct reach out from the then chairperson of CCIL, Mrs. Usha Thorat, former deputy governor of RBI, who called and said, would you like to join? So it's not a wrong thing for a company to reach out to a person and say, would you like to join? What value can you bring? In fact, the only thing I used to tell as a professor, people used to come to me and say, can you please join us as an independent director? The only thing I would tell them is the following, which is that please be prepared for a very painful director if you're choosing me. I will not sign on anything unless I'm comfortable. Now, frankly, I know, having been in business myself, having a painful board is not a good thing, right? So my only request to them would be, I will do my best job. I can assure you I will do my best to further the company, to protect the minority shareholders, all of that. But you should be prepared for a lot of questions. Okay. Having been in business, the first point I made, Mr. Damodaran's point about disagreeing without being disagreeable, I tried to follow. But the discussions would definitely be there. Particularly in areas where I would not get comfort, I would have discussions. Now, one thing I would do in some cases, particularly when I saw really big issues, I would have discussions prior to the board meeting itself, so that I don't waste the time of the entire board on specific issues and draw it out for very long. And I would tell the rest of the board I'm having these discussions, so that there's no, I'm not trying to do anything on the side. Now, is it a good practice for independent directors to be appointed by the company? It's a great question. As I said, I don't see a problem with it in all cases. My request to all prospective people, joining a company, you have to be comfortable with the company. I mean, as an independent director, you know that you're liable for a lot of things. Do not join companies you're not inherently comfortable with, and you are taking on a responsibility when you do that. Do we prefer a process for appointment of an independent director? Absolutely. Rather than a promoter calling up and saying, will you please join me? If the NRC can have a process where they employ an agency and look at a set of names and then choose somebody, that would be great. In fact, we insist on that in some of our own regulated entities. So on exchanges, clearing corporations, depositories, the entities we call the market infrastructure institutions, we will not have this. You call up somebody and say, you're my friend, please join. We will ask for a process to be followed and a proper vetting process to be done. But every company doing this is probably impractical.
So can we take the next question?
Thank you, sir.
Right. So can I request Mr. Surya to ask his question?
Hello, good
Surya,
afternoon.
please come in. Yeah. Anandita,
Just give me a minute.
Surya, or you can take up the next if like there is some audio issue.
Okay, I think we do have a next question from Mr. Debajit Ghosh. He had asked that whether he can ask a question. So, sir, please.
Am I
Mr. Ghosh?
audible? Yes.
Yeah, very much.
Thank you very much, sir. And it's really a brilliant session. Now, I was doing SEC reporting for Shell. Now I have left my job. Now, question is, as part of my experience, SEC has a very enhanced criteria to measure the independence of independent directors. And also the disclosures requirement are very much strict, as well as the selection process, which now I'm not really a flag bearer of SEC since I have some experience. Question is, what can we learn from SEC in the field of enhanced transparency and independence of the directors, improved disclosure requirement by the companies, as well as unbiased selection process?
No, excellent question, Mr. Ghosh. Thank you for that. In fact, if you're really interested, you should see the first set of recommendations that SEBI brought out post the governance committee reform, which was set up under the chairpersonship of Mr. Uday Kotak. So there was this entire committee on corporate governance which was set up, which came out with a whole set of recommendations. we have to be honest, only implemented. And by the way, that particular committee did look at best practices globally as well, including with the SEC. So it was a pretty comprehensive report. It's a very high quality report, which came out several years ago. I can't take credit for it. It was done well before I joined SEBI. What we have finally implemented is a watered down version of that. I wouldn't say watered down, but a part portion of that. Okay. A lot of the things that we wanted to do, including, forcing the separation of the chairperson and the MD, strengthening the independence of the independent directors, making sure that, they can act independently without worrying about, whether they get reappointed, etc. We've done some of it, but not the whole hog. Now, one of the things that we are also conscious of, Mr. Ghosh, is that we have to work with a pace which is okay for the ecosystem. As a regulator, we can make two kinds of mistakes. One is when we allow bad things to happen. That's a type 1 error, right? So when we allow bad things to happen, that's a type 1 error. The second thing that we can do is when we come out with a set of regulations which are so onerous and so impractical that it becomes difficult even for good people to do their business, then we come in the way of capital formation. And that I would call a type 2 error. So we have to necessarily balance between this type 1 and type 2 error. And sometimes giving a glide path for implementation of what are otherwise radical reforms is part of ensuring that there are less type 2 errors. So this is one of the reasons why we are doing things kind of in a graded manner. I'm sure there are a lot that we can do to strengthen, for instance, independent directors even further, and protect them even further, so that both of us work together hand in hand. The discussions are ongoing. This is not something which will stop here. And frankly, having a body of people such as yourself, to what Mr. Gupta mentioned earlier, that I'm sure you have in ISEA itself, you have a subset of people whom you discuss. What we would really like is if lots of people can contribute to the deliberations of that body, so that the body can take an informed view of what is a consensus across multiple people. I can assure you there will not be consensus on everything. But at least if on 30, 40, 50% of the matters there is a consensus, it can be a representation from independent directors to SEBI saying, please do the following. And that would be super useful for us because it's coming from the ground. We don't have to sit in our ivory towers and say that we know everything. We don't know everything. But coming from you, it will come with a lot of weight, and we trust you implicitly because you are independent directors. You are doing it for the best of the company, for independent shareholders, for public shareholders, etc. And it will have a lot of weight when those suggestions come in. So it's a journey, long way to go, we understand. But specific suggestions we would really welcome, particularly if it comes in a collated format.
Great, sir. Can I make one small comment, please?
Sure.
Yeah, no, I completely agree. And the balance between type 1 and type 2, we have to balance. My only, I worked the first 5 years in an Indian company, the remaining 17, 18 years in a multinational in the oil and gas space. What I've noticed here, and after now I'm doing something in the field of education, that our hierarchical structure becomes a huge burden in really making meaningful reforms. Even if you say in the ground level, we all contribute, but there will be someone with a little bit more authority and they will not allow this voice to kind of come up. I don't know how to navigate this because I have seen a lot of well-meaning, good, experienced, accomplished professional wants to really contribute in this initiative or other societal initiatives. But our hierarchy is actually a big bottleneck. I'll stop here. That's one of my observations. I may be wrong. I may be right. I may be partially right also. But just sharing a thought.
So one thing I'll just quickly make.
And just sorry, sir. And we don't allow bad news to come up. I'll stop here.
No, I think all points are absolutely valid. I can tell you what with both Reserve Bank of India and Securities Exchange Board of India, for our regulated entities, we are very, very conscious of this. So I mean, for instance, the AMCs of mutual funds, or as I mentioned, the boards of exchanges, clearing corporations, depositories, or in the case of RBI, banks and NBFCs. There we take a lot of care to ensure that independent directors are actually vetted by us. So we have, in the case of SEBI, we have a concept of public interest directors. These are people whom we approve. And we want people of stature who can actually, because you're talking about people who are handling public money, we want that board to be really, really independent and powerful. Now, we have not yet come to the stage where we want to do this for every company in India. We have 4,000 odd listed companies. We have not come to that stage as yet. But I can tell you this: I think the direction of travel is reasonably good compared to 20 years ago or even 10 years ago. We find that a lot more of companies, particularly that want to enjoy the trust of the markets, do have processes which ensure that there is a good process for getting independent directors, which are not necessarily friends and family. But I can also say that the responsibility is ours. As independent directors, what I mentioned earlier, we have to disagree without being disagreeable. We have to make sure that points of disagreement are minuted. And if we are genuinely uncomfortable with something, uncomfortable enough to leave the company, please document it. If you need protection from SEBI, come to us. Yeah. Anytime you have a problem, come to us. We are there on the same boat. Yeah.
Thank you very much, sir.
Sir,
That's absolutely
yes.
Yeah.
Hello, sir. This is Surya. Can you hear me?
I think,
please
Surya,
go
we cannot take any more. You would like to take a question, sir?
Yeah, I can take one or two questions more. Let's go ahead.
Okay. Thank you. Thank you, sir. Thank you for your wisdom and the expectation from the independent directors. So my question is regarding the selection process for the independent directors through NRC. That's what you mentioned. Now, as you are aware that there is this independent directors data bank under IICA, we are not seeing much traction from the corporates in terms of selection of independent directors from the data bank. So can SEBI mandate, there are so many openings for the independent directors not getting filled, and then there is this huge data bank of independent directors. So if SEBI can mandate, the corporates to at least, screen, vet through this independent directors data bank and see, if they can get some good quality independent directors. So somewhere, I think, this disconnect is there, and we are not able to kind of see much traction from the data bank. So I just want to you to, your thoughts on, how do we improve the selection process for the independent directors? Thank you.
Thank you, Mr. Surya. This is something I will look at, and then I'll connect back with Dr. Gupta as well.
Thank you.
Okay, so I believe this is where we need to stop. Otherwise, as you said, we have a larger base and our directors are really excited to ask as many as questions. And that's the reason today the gathering touched up to the numbers of 700 at one point in time. So very interesting points. Just one or 2 points, sir, I would like to mention as one. Point number one, I mentioned we have consciously selected some group with a good representation across industries, sectors, and structures, especially the ownership structures and capital structures. So on that, I will be happy connecting with you. And as you said on key aspects, we'll be very happy because we can adopt a funnel approach. We have a larger base, so we can pick up some major policy issues, and that we had been doing in past also, and feeding this as policy papers to the ministry. So we can take up issues, we can consult the larger segment, and then we can filter it out with a second round of consultation with the specialist independent directors, more experienced one, a smaller group, and the findings can be shared with you. So that's all doable at our end. I will definitely be reaching out to you with my inputs. What all we can do, we'll be happy to serve, because the intent is to make the boards more professional by having more professional representation rather than companies just going by their own choice. And for that matter, the data bank is continuously making efforts. We organize face-to-face things every month. We organize these webinars, and then we have pre-recorded e-learning modules to orient them about the evolving framework of corporate governance and also the best practices. So it was very insightful indeed, and I must thank you once again, sparing so much time from your busy schedule, and we'll be happy to connect further and would like to serve you wherever you wish us to. Thank you so much.
Thank you, Dr. Gupta. Let's take this offline.